Fantastic. I'd love to welcome everybody back into the Independent Investor Channel studio here. We have an absolutely special guest with Vox Royalty, the Chief Investment Officer, Mr. Spencer Cole here, talk about one of the most intriguing companies that I've had the pleasure of reviewing here as of late. Company stock price has just been on absolute, it's been on a tear here. Last 5 days up 11%, month up 32%. And we're talking over the last 6 months, 65%, and over the last year, 60%. So these guys are absolutely doing something right. They're absolutely banking on a lot of transactions. I'm sure we'll get into that. But without further ado, Spencer, I'm going to kick over the floor to you and give us a general introduction for yourself and the company that you represent.
Absolutely, Ryan, and thanks so much for having me here today. My name's Spencer Cole. I'm the Chief Investment Officer of VOX Royalty Corp. A little bit about myself, as you can hear from my unfortunate accent, and hopefully it's not painful on your listeners' ears. I'm from Australia originally, but based in Toronto now. I'm a mining engineer and have worked with some of the largest mining companies globally, such as BHP and South32. And I guess, my role and how I came to be at VOX was I co-founded a business called Mineral Royalties Online, and we developed the world's largest proprietary database of mining royalties. And then we merged that business into VOX a few years ago. And so that was myself and one of our colleagues' entry points to VOX. VOX as a company, we are a precious metals focused, high growth mining royalty investment company listed on the TSX Venture Exchange and the OTC QX market. Our business in a nutshell is acquiring really attractive royalty streams on other people's mines, where we can see, significant amounts of yield and revenue for our investors going forward. And I'm happy to unpick that through subsequent questions, Ryan.
Absolutely. And just for my viewing audience, just what Spencer was talking about here, TSX Venture under the ticker symbol VOX. Here on the U.S. exchanges, the OTC Quality Board markets VOXCF. And I will provide all that information as well as some amplifying I used in the production of the coverage of VOX in the description below. So Spencer, just unwrap for us a little bit what a mining royalty is for some of our investors. I had to do some homework when I dug into VOX, and I'm sure there's a lot of investors out there that would love to take a shot at VOX, but they just wanted to understand a little bit what gives below the surface on what an actual royalty is.
Sure thing, Ryan. So a royalty or a mining royalty is really just a contract between two parties. It's typically a contract between a mining company and another company or an individual. And what it entitles the holder of that royalty to is a future revenue stream or an income stream. And it's typically a percentage of revenue, usually about 1 to 3% of all the revenue from that mine. Now, the way that these mining royalties are most commonly created is, let's say, Ryan, you find you hit the mother lode and you find a gold deposit, but you don't have $200 million in your back pocket. Well, yep. I don't know if you do, maybe if you do or maybe you don't, but typically these prospectors don't have $200 million to build the mine themselves. So what's very common is they will sell that discovery to a larger mining company who can build the mine. And in return, that prospector will be given a mining royalty contract that gives them a future percentage of revenue or profit if the mine gets brought into production.
That's incredible. Yeah, I was super intrigued when I did it's kind of like mineral rights. Is that kind of the same idea, Spencer?
So typically the difference is that the mining company holds the mineral rights. So they have the right to mine. And then as sort of an obligation attached to those mining rights,
yep.
The royalty holder gets a percentage of any of the profit or revenue from those mineral rights. So the mining company holds the mineral rights. The royalty holder owns a contract that is sort of almost like a mortgage over those mineral rights.
Understood. So if I'm an investor, what are the benefits of investing in mining royalties versus other commodity-based assets, Spencer?
So it's a great question, Ryan. And I guess some of the key benefits to owning a royalty rather than, a different type of commodity. So, if you're an investor and you're worried about inflation, I think all of us are worried about inflation at the moment. I'm currently planning my wedding at the moment in Southern California, and I can assure you I'm facing a lot of inflation from every single cost line item in the budget. So I'm feeling it. But if you're looking to get a hedge on inflation, commodities, historically have always performed well in high inflation environments. So, you can obviously have your pick of a lot of different commodity-based benchmarks. You could buy a physical metal. You could buy bars of gold. You could buy the mining company. You could buy the GDX or an equity-based indice, or you could buy a company like a royalty company. A royalty company offers you the benefit of all of the upside link that a mining company gets. So when the price of gold goes up, you get that upside as a royalty holder. When the company hits, further exploration success, you get that benefit as a royalty holder. When the mining company expands production, you get that production upside and your revenue increases for the royalty. But then importantly, a royalty company doesn't face any of the downside that a mining company does. So, we as a royalty investment company, we don't pay operating costs, we don't pay capital costs. Our first check out and our first investment is our last investment. So we're in an attractive position where we sit back and we collect checks from, all the different royalty properties that we have royalties on, and we get the benefit also of diversification. So we have 54 separate royalties. If one of those mines, God forbid, collapsed, or one of those companies went bankrupt, we've got a host of over 50 other royalty investments. So investors get all of the upside that they would otherwise get, from any other commodity-based investment without any of the downside in a much more diversified risk portfolio fashion.
Yeah, that's exactly what I saw when I was looking at it. Really limited the risk, but it spread the diversification across multiple properties and multiple jurisdictions around the world too, Spencer. What makes a royalty company successful? In other words, there's other royalty companies out there that I looked at as well, just to try to cross compare with what you guys have got. What is the pedigree that goes into a successful royalty company, and kind of give us an idea of what maybe differentiates you guys from your peers.
Absolutely. So I think one of the key things that makes a royalty company successful is, the ability to truly understand mining properties and mining assets. And so to truly understand where is the value in the ground here, where are the risks? Mining is obviously a very risky business, and what is the true probability that this discovery will be brought into production? So at VOX, our business has been specifically constructed for generalist investors who perhaps aren't mining engineers themselves, so they aren't able to pick the right mining projects. Investors in VOX get the benefit of our management team consists of mining engineers and geologists on the front lines of our business. So anytime we're evaluating a new royalty investment, we have our own engineering team and our own geology team who's reviewing the drill holes, reviewing the engineering work to be able to say that every time we allocate $1 of capital to a new royalty investment, we truly understand what the risk-adjusted returns on that investment are going to be. So one thing for investors to be wary about is, not all royalty companies offer the same deep technical expertise that VOX has. Historically, there have been some royalty companies that have perhaps had too many mining investment bankers who perhaps outsource some of their technical due diligence. We do almost all of our technical due diligence in-house to ensure that we're picking the right mines and the right mining projects. So that's one key aspect of what makes a royalty company successful, is a technical management team like VOX's. Another key aspect to our business, Ryan, that is absolutely critical to create value for shareholders is how do you source mining royalties and how do you ensure that when you buy them, you're paying disciplined, attractive prices for those assets? Because there's a lot of royalties on the planet. In our royalty database, we have over 8,000 that we're aware of. But paying too much for royalties results in poor returns for investors, obviously. So as a company, we rely heavily on some really interesting sort of innovative ways to source royalties that our competitors are blind to. So, for example, we historically bought a royalty from a hearing aid technology company. We bought another royalty from an automotive parts company, another royalty from a telecommunications company.
Yeah.
So we're able to consistently use our royalty database, which we've developed in-house, which is the world's largest royalty database, and a deal sourcing network around the globe to find royalties that are really attractive from a mining and geology perspective. But importantly, we're able to get in front of those deals without any of our competitors aware of them. So we're able to pay very attractive prices so that we're allocating the right amount of money to the right assets, so that our investors get all the benefit of that upside as those mines start generating revenue on our royalties. So I think those are two of the key elements that make a royalty company successful: technical management, picking the right projects, and a deal sourcing machine that can source large volumes of attractively priced royalty deals.
Fantastic. How does cash flow versus risk need to be managed, Spencer?
Yeah, so this is a really interesting question, Ryan, because a lot of investors can get seduced by revenue, and it's easy. When you see a company spitting out a bunch of revenue, it's easy to say, well, is that success? Does that define the success of the business? But obviously, dollars are dollars, but they don't necessarily come with the same volume of risk. So, for example, a dollar of royalty revenue that comes from the Democratic Republic of Congo is not going to be equal to a dollar of royalty revenue from Western Australia.
That's right.
So, I guess when we as VOX, when we're evaluating new investments, we're really obsessive about looking at what is the potential revenue profile, but equally importantly, how much risk is coming with each dollar of revenue. Which is why when you look at our portfolio of 54 royalties, we're heavily weighted towards what we'd call safer jurisdictions. So 80% of our royalties are in Australia, the United States, and Canada by design, because if we can reduce the amount of risk associated while maximizing the royalty revenues in our portfolio, for our investors, that's the best possible way to maximize truly risk-adjusted returns, rather than just blindly chasing revenue that may have a huge amount of risk attached to it.
Yeah, absolutely. Going after those tier one jurisdictions that you talk about, Spencer. Absolutely. Take a step back to talk a little bit about the history of Vox Royalty, when and why it was created, how it's grown, and what makes Vox unique. You've talked about it a little bit, but I was able to earmark a ton of different differentiating factors. The one is the one that's in all of your guys' side, the fact that you're trading at such a discount on the stock to the market. As good as the numbers are, I think there's still an immense amount of value here. And you're just touching on a small pocket about it, but just give us a little rundown of the history of Vox, if you would, Spencer.
Absolutely, Ryan. So Vox as a company has been around for 8 years. And the original, I guess, the seed of an idea that grew into what Vox is today was a group of family office investors in the United States who really liked the exposure to commodities and really wanted to get an inflation hedge, but they didn't like the returns, and frankly, I guess some of the how risky the junior end of the mining industry was. So they said, to our founder Kyle, they said, is there a better way for us to get this commodity-based upside without taking on all the risk of just throwing darts at a junior mining dartboard? And out of that, the company was seeded with $7.5 million 8 years ago. That's been patiently grown in terms of our royalty portfolio. So from that $7.5 million, we've grown it, and we've allocated about $30 million of capital to build our portfolio of 54 royalties. And now, the market capitalization of that is about $150 million. So we've been quietly and efficiently building a portfolio of royalties that is one of the largest portfolios in the world, but in a very capital efficient and disciplined manner. Because we were a private company for 7 years, that discipline of not having, not being able to issue equity in public markets, that discipline of being very capital light has stayed with us as we've gone public last year. So I guess that's a little bit about the history of the company and why it was created. So in terms of how we've grown, there's two ways to acquire royalties. One is to acquire existing royalties, which I touched on before, which is, I guess, going to the prospector that made the mineral discovery and buying the existing royalty. That's what we focus on. The other way that you can buy royalties is, I guess, funding mining companies. So writing them a check to help them build their mines. And we've back tested, thousands of royalties that have been sold historically, and consistently we've seen much better returns through buying existing royalties from prospectors. So that's how we've grown. We've typically bought royalties from prospectors and groups that originally held the mining projects, rather than the other side of the other path, which is funding mining companies, which we don't think the returns are there for us. And then, to your last point on your question, what makes VOX unique? I touched on a few points earlier. The fact that we have a heavily technical management team of mining engineers and geologists. I touched a little bit on our royalty database of over 8,000 royalties, which allows us to identify forgotten but really attractive royalties. Beyond that, you did touch on, I guess, valuation. I think one thing that is sort of an opportunity within our portfolio is because we have so many Australian royalties, but we are listed in Canada. I think there is still a bit of an understanding gap in terms of the value and the quality of the royalties that we have in Australia. And that was one criticism when we went public last year, Ryan, was, business model sounds interesting, but I don't know all these Australian mines and these Australian mining companies, despite the fact they're listed on the Australian Stock Exchange. We have been quite heavily discounted because of that heavy weighting towards Australia, which for us seems a bit irrational because we view Australia, particularly Western Australia, as probably the best place on the planet to build and operate a gold mine. So I think that is one unique aspect to our business, that we're the second largest holder of mining royalties in Australia, second only to a $30 billion company, Franco-Nevada. So I think that exposure to Australia and that first mover advantage in Australia sets us apart from a lot of competitors and gives us a real edge in continuing to grow in a market like Australia.
So it segues perfectly into my next question. What does the future hold for VOX Royalty? I know right now, and correct me if the information has changed, 5 producing assets right now, looking to grow really into 2022, but really into 2023 as you guys look to potentially double that book of producing assets. That is incredible, the amount of transactions that you guys have been able to make. But give us a little bit of a synopsis on where you think what the future holds for VOX Royalty as you look to expand the portfolio base.
I think you've hit the nail on the head, Brian. One of the key aspects to the coming quarters that investors can really look forward to is just a huge amount of organic growth within our royalty portfolio. So as you mentioned, we expect to organically increase from 5 producing royalties to 10 producing royalties by late 2023. And we think there's a healthy amount of upside on that as well. So that's without a single additional dollar of capital required. That's just based on the 54 royalties that we have in the portfolio today. So naturally, as we double the number of producing royalties, revenue will follow from that. So analysts have our revenue more than doubling over the next 2 years, which is quite exciting. Beyond that, I think we're continuing to work on our sort of investor awareness campaigns. So I think commencing trading on the OTC exchange in the US was a huge step forward for us because it helped us connect better with US-based investors. And in the medium term, we are looking at getting a main board listing in the United States. That's something that's currently under review. And then beyond that, we're continuing to work with a number of investment banks and brokers to get some more research coverage. We currently have 3 independent brokers covering us from a research perspective, and we expect to get an extra couple of brokers over the coming months and quarters are going to initiate research coverage on us. So that should be really helpful for investors to be able to understand our portfolio a bit better. And then I think from a acquisition perspective, we're certainly not sitting on our hands, Ryan. So we've got a few really exciting deals that we're working on where we think we've got a proverbial tiger by the tail, or a few tigers by the tail, on other acquisitions where we're identifying royalties that we think could be in production longer than we as management will even be alive. So we're looking at some royalties where they're multi-decade potential mine lives. And without losing our discipline on pricing the deals. So investors can look forward to some very attractively priced but large royalty acquisitions where we're not going to need to raise any further equity. We're not going to need to do any capital raising to do those deals. We're doing them in a very sort of capital efficient way to bring that value into our portfolio. So that's a little bit about what we think the future holds for VOX and our shareholders.
That's incredible. I have to ask you one question from my own personal playbook, Spencer. It's one that I've wondered, and I had it earmarked for you to ask. You were just quoted on a news release here talking about some of the drilling results that had come back on some of the growth properties within the portfolio. I know it's of interest to look at the tip of the iceberg, right? Those producing assets, and adding to that, those are really the home runs in the portfolio. But I would say that there's a beneath the surface type of value that I hope you're getting credit for, because each and every one of those progressions that are made on the growth and even some of the early stage projects, does that create value, even though it might not be an asset producing yet? Because you just announced a host of that stuff, and I've been covering you guys for the last month since I researched you, and you guys have got news coming out all the time on progressions that are being made, on royalties that you hold, on companies that are marching toward that producing stage. Can you comment a little bit about the below the surface value at VOX Royalty?
Yeah, absolutely, Ryan. So I guess when investors think about our portfolio of royalties, so as you mentioned, we've got 5 producing royalties currently. We have about 20 other royalties that are in some stage of development, whether they're either in construction, about to move into production, or that the engineering work is just being finalized, or they're moving into sort of some form of engineering study. So those projects, I guess, we have a clearer line of sight as to how they go from their current stage into production. And look, and then we've got about 30 royalties that we would call, I guess, exploration stage, which are aggressively being drilled out. Now, when we look at the rates of return and how many times our money we want to make on different investments, typically for our producing royalties, those are investments where we aim to make anywhere from, say, 3x to 8x our money on those investments, where ideally we can get payback on our money within 12 to 24 months. Now, if that sounds attractive to investors, which hopefully it does, what's even more attractive is when you go into the exploration stage bucket of royalties. So we've got 30 royalties in that bucket, and those are royalties that typically cost us anywhere between 50,000 to, say, 200,000. Now, what the types of returns we're aiming for on those properties are between 20x to 50x. So buying a royalty today for $50,000, which we think could make us call it $3 to $6 million. When we say $50,000, people say, well, it sounds like a little tiny deal, but when you're targeting sort of 20x, 40x to 60x return on your money, and you've got 30 of those projects, each month as these properties are drilled, the probability that they move into production increases. So,
Yes.
the probability that we make 20x or 30x on some of these exploration royalties increases with each drill hole. And the benefit for us as a company is, we don't pay for any of that drilling. So, God forbid, Brian, if our management team got hit by a bus tomorrow, which we hope doesn't happen,
Sure.
our royalty portfolio, similar to a wine cellar, would just continue to appreciate in value.
Yes.
So as these exploration properties are drilled out, the probability they return cash flow to us and get brought into production increases materially. So VOX investors get the benefit of every month we're just gifted with a huge amount of drilling and a huge amount of discovery,
Exactly.
which we pay no extra dollars for. So
Yeah.
it's easy to get excited about that because it's such a capital
Cool.
efficient and high return business model.
Yeah, I had to ask you that because I've watched a lot of your interviews online and you hadn't been asked quite that question in my way. So thank you very much for that. Last question, and then we'll kind of conclude the interview a little bit. As a VOX shareholder yourself, what are you most excited about?
Look, I'm most excited about just delivering what we've already committed to investors. That sounds really boring, but
Nope.
I've got 4 of my brothers and sisters are VOX shareholders as well, Ryan, and I can assure you that God forbid any day the share price goes down, I'm getting phone calls from multiple brothers and
Sure.
sisters saying
Yep.
what's going on. So it is very personal for us as management. We own 15% of the company, and our families own extra
That's right.
extra on top of that. So look, I think delivering on what we've committed to, so delivering on exponential revenue growth, delivering on organic growth in the number of producing royalties we have, continuing to find diamonds in the rough, new royalty acquisitions, and then importantly, continuing to have the share price reflect the value of this really unique business that we've created. That is what really excites us, is creating something that's very different, and then having our friends, family, and all of our shareholders be rewarded with that really unique business that we've built.
Spencer Cole, Chief Investment Officer of VOX Royalty. If you guys want more information, I highly encourage you to kick over to the very, very useful website at voxroyalty.com. The OTC Quality Board markets here are VOXCF, ticker symbol. I will share in the description of this video. Spencer, I will kick it over to you for the last word here. Thank you so much for being a guest on the Independent Investor channel. Awesome, awesome interviews. Great to have you.
No, thanks so much for your time, Ryan, and look, thanks so much for your listeners for tuning in. We would welcome with open arms your listeners to join us on this rocket ship adventure that we're building at VOX. We're extremely excited about what we've built and what's ahead of us. We really do believe we're really just at the tip of the iceberg in terms of what we can deliver for shareholders. So thanks for your time, and welcome to VOX.
Yeah, I appreciate that. Thank you so much, Spencer. Be well and keep it up. All right. Keep up the great work. Take it easy, my friend.
Thanks, Ryan.
All right. Bye now.